Good morning and welcome to Trading with Larry. It's Larry Benedict, joined by Eric Shamilov. Good morning, all. Exciting Monday, a reverse Monday from what we've seen over the last 4 months or 3 months, down Monday. It's unheard of. Interesting trading action for sure. For people that are subscribers that are watching, we had a Bitcoin put that we've been kind of sitting on during this whole move. I wish it would have happened quicker than it did, but we ended up making about a 40% profit on our option trade. We closed that. We are no longer short Bitcoin. We're going to let other people take it the next leg, which there may be a leg lower because we still didn't see stops at all. And here we sit, and S&P at the end of the day was down about 90. And they ran at 30 handles on the bell, their usual. And then this morning, overnight, I don't know if you were awake, but it literally fell off the table. NASDAQ was down almost 300. S&P was down like 75, 80. And, we've slowly clawed back. And what's very, very nice about the market right now for all of us that are trading and trading options is when you have vol that's like, I don't know where the VIX is exactly right now, but it was over 22 on the future side. When you have VIX like that, it gives opportunity to hedge out exposure. And I like a trade of selling upside calls or call spread because for tomorrow, 2.5% out of the money options are like bid to the moon. So I don't think we're going to get anything like that before Nvidia. I'm surprised we're down as much as we are coming into Nvidia, but maybe it's a relocation before the trade. There are stocks. I know you guys on this podcast won't believe it, but there are some stocks that I'm looking at potentially. Like I kind of like Microsoft to the long side for a trade, just for a trade. But I would express that by selling a put spread below the market. So if you look down at like the 480 puts or 475 puts, and you're able to do something like that. And S&P's down a measly 25, but I was talking to a friend of mine, and I kind of picked up on this kind of, I wouldn't call it trend, but just something that's worked, and that is that the risk on trade, which has not worked, okay? It has not worked. But the risk on trade, I'm not saying it's catching a real bid, but gold, which other than one day, and I'm going to give you one day, it decoupled and did something insane. But every day, gold is a risk on asset. You've got to look at gold and S&P. You got to look at Bitcoin and S&P. Those are the things you need to look at, okay? And what's interesting today, and it may be a false narrative, is that risk on is not doing well, but it's holding in better than the market. So that's what I'm seeing this morning. I like selling upside call spreads, zero DTE or one day after zero. So one DTE, one day. So tomorrow's expiration. I think you're kind of safe in the sense that we're waiting on Nvidia. So I don't think the market's going to run away to the upside, and it looks a little scary to the downside, but it's not. It's not really moving. I'm trying to look for these numbers. Some numbers came out this morning. I don't know. ADP. When is ADP? It's not today, I guess.
No, it came out.
It did. What was it?
Yeah, private payrolls dropped.
Okay.
Minus 2.5K.
Okay, whatever. It's a weekly. It's a nothing. That's not the one we need. And numbers are starting to trickle out, and they'll start coming more and more. We got a bunch today. 10 o'clock. We got factory orders, durable goods. But I think you got to take all of these numbers with a grain of salt, right? What do you think?
Yeah, 100%. The data is not going to be reliable. I don't think. Um, Unfortunately, I think the Fed is going to rely on it. I don't think it's a. I don't think it's too much different than what the Fed always does. I mean, they rely on pretty stale data. It's not high frequency data, and so to me, it's like a non-factor. Uh, they always rely on bad data.
Yeah, I mean, look at gold now. Gold is moving a little bit, and my question to you is, why is gold okay when gold is usually not okay when the market's not okay? Is it decoupling here? I doubt it, but
Well, the
like all,
correlation that you see there, 100% is a correlation right now, but that's different than what's been happening over the last year or two. You run a
no,
correlation.
listen, listen, as a trader and, trading with Larry, we're looking for snippets of time, whether that's 1 day, 2 days, but I can't determine what's going to happen in a week. I'm trying to get through today. So I'm looking at these clues, and it's interesting. I said to Touchdown Tommy, who's here today, even he can't get the market up. Even this guy can't get the market up. It's beautiful. So he can sit here and it's still not helping. But I said to him, I said, I kind of like gold here. I want to add to my long gold position. And literally gold, since literally we got on the air, gold ticked. It's only up $20, but it moved $20 to the upside. And like to me, is that a clue? Like I'm trying to put the puzzle pieces together today because that's what we try to do to get through the days. Like, you know, is this a risk on scenario? Is this moving before risk on, or is this not even relevant? Where like last week it went off the rails. Bitcoin is not really catching a bid. I want to spend a little time now before we get too far into the weeds about Bitcoin and about the trade in Bitcoin, the action
Before,
in
before,
Bitcoin.
before you get into Bitcoin, I think you raise a very interesting question. You're looking at gold decoupling today a little bit, and you're like, is this a risk on move because it's been so correlated and now it's going higher? You're looking at that as a clue. So I think we should talk about like what is actually driving the market down right now. Yesterday, I put up some charts. Okay, I could put them up again if you'd like, but we covered how liquidity has been drying out. And last night, I'm browsing through Twitter. The JP Morgan trader came out and said this is all about drying out of liquidity. So the top dogs are saying basically the same thing we were covering yesterday. So I have to assume that liquidity is in fact an issue here. So
Timeout. I'm just going to call it quick timeout. I get a couple during the podcast, so I'm going to call quick timeout on that. Okay, and the quick
only a couple.
timeout.
This is your first one. You get another one.
Okay, I get two. All right. Well, let me just say this. I think that's BS. Okay, liquidity drying out. What does that mean? There are no buyers. I mean, liquidity is only provided when there's buyers. The buyers dried out. Okay, the buyers. Listen, one thing that we've said on this podcast since day one, is buyers, okay, live higher and sellers live lower. No one could buy right now, Eric, because they're all down money. They're destroyed. Okay. Now, they may get a little bit of power if the market somehow gets a little footing. But when they say liquidity dried out, what happens is the algorithm can't handle a 20 volatility. Anything above 20, they cannot handle. The algos want slow grinding, tick up. You know what it is. It's like dee 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 dee. Okay. And they're running in front of every order and they're making their money. But guess what? You're right. There are no orders. So the computer now, who used to front run, I'm making it up, 10,000 orders a day, one computer would front run 10,000 orders a day. Now they're only seeing 1,000. So when you say liquidity is drying up, you're
Not the liquidity that you're talking about on the bid ask. That's
No,
not what I'm
I'm
talking about.
talking about liquidity of buyers. You're just literally saying buyers are not buying. I mean, that's the thing they're looking at. Like, so what,
Talking about
liquidity.
bank reserves at the Fed, but okay. All right.
What do you mean? The Fed is buying stocks. That's what your claim is right now, that you need liquidity for the Fed
That's
to
not my
buy
claim.
stocks.
The
Oh, wait, they're
bank,
lending OpenAI money to buy stocks? Like, no,
yes,
I think what you're looking at, to be honest with you, okay, is just they're using the term liquidity just to state that the buyers have dried up. I mean, you've seen it. I mean, we've seen it, especially since April of this year. These buyers are insatiable. They don't stop.
no,
They don't care.
Larry, I'm
What?
talking about I'm talking about this. Okay, I pulled this chart up yesterday. These are bank reserves at the Fed. See this tobogganing? You see the tobogganing here? You see it, right?
It
You see
looks
the
like a big
toboggan?
toboggan. Wait, it looks like a big toboggan to be down 2% from an all-time high. Dude, you're making it like we
No, no.
crashed or whatever. The S&P
Yeah,
is
but
like 3% from an all-time high. I mean, it's
this
crazy.
affects a lot of things. This affects how much leverage can be extended in things like Bitcoin, doesn't it? These are bank reserves held at the Fed. So if you're talking about, okay, when are we risk on again? If this is in fact a liquidity issue, which I think it is, then when is that liquidity coming back? I've been saying the Fed said that come December 1st, some of that liquidity is coming back into bank reserves. This is all a function of them running down the balance sheet. Now there are other things at play.
Timeout.
Okay, yesterday,
Timeout. Go back to that. Go back to that chart, the one you just had,
oh dear,
because you're saying toboggan. If you go back to the day that we made an all-time high, we're tobogganing into that all-time high. Okay, because we only made an all-time high 2 weeks ago. So liquidity of this measure, what you're looking at here, has been drawing for months and months and months. So it's
no, no, that's not the case. That's not the case. It's been drawing since it began in August, and it started really accelerating in September. And to see the
okay,
effect of
but
that,
we've
you go
made a million new highs since
hold
September.
up, hold up, hold up, hold up. You see, you go back to the bear market of 2022, you could see this in a very stark way. It doesn't always work out that way, but liquidity uh, with bank reserves is very important. You know
Do
that,
you
what
think
they
because there are
hold at the
bank
Fed.
reserves that creates a bull market? I mean, I think this
I
bull
think, yeah,
market.
I think 100%.
I
Liquidity,
think the bull market is
100%. I think bull
okay.
market. Yeah. But
Okay, you don't think retail buyers at Robinhood basically
no,
ran in and
I
bought
know
every stock?
a lot of bears like to say, "Oh, the retail crowd is driving the market." Oh, it's not. I think at the end of the biggest factor is
Dude,
liquidity.
you literally came on the air a week and a half ago trying to explain how smart money, big money, who made big money, got out of Bitcoin, but it's better now because a bunch of retail owns between 1 and 10 coins. How did that work out? I
Did I
mean,
say,
come on.
did I say
I'm
that
just
is my
saying,
opinion?
I just listen. What I
I was just
see,
talking about a narrative. I didn't say that
I
I.
understand, but what I
Yeah,
see, what?
I'm gonna
I
have.
didn't,
I get two timeouts. I'm calling one of them.
okay,
I'm calling the timeout. That's not what
okay.
I said. You know that, right? You know that. You
No,
gotta
I mean
know.
that's what you pointed out, 100%.
We were discussing a prevailing narrative in the market, but so I'm gonna call a personal foul, ten
Okay.
yard penalty.
You can. I'm just saying right now, I don't think I think what I think is happening is we have big earnings on Wednesday night, right? That's really what's driving the market here. Okay. There are other forces in play. Nvidia, what? You don't think Nvidia is driving the market? You don't think their earnings, dude, you know what their pricing? Pull the
Was it
strat.
the number one underperforming stock? If it was the number one underperforming stock dragging everything down, maybe, but I don't think it has been since this drawdown, has it?
I think it's acted not well. It's trading at 184 or
Nothing has acted
183
well.
down from 220. So when Dan Ives in his pink shirt with a red tie got on and said, "You got to buy this thing. It's worth 7 trillion." It was trading at 218 and now it's trading at 183. I mean, that's a big move, and now you're at the day of what I call reckoning. And the day of reckoning is the earnings. And listen, the market, let's call a spade a spade. The S&P hasn't been here in a while, okay? And you know where the S&P is on the year right now? When we open this morning, it will be down, it'll be up less than 13%. It'll be in the 12 handle, okay? God forbid Nvidia, the guy doesn't lie. He tells the actual truth, which is very rare for that guy. Okay. That guy is a cheerleader at the most epic level. But if they read into this open AI deal and they don't really feel that it's skewed in the favor of Nvidia, and they look at the Oracle situation and everything that was said, and Nvidia legs lower, let's say down to, listen, I never really I traded Nvidia over the years, but I never really traded it actively until it was like 130. Okay. And that was over the summer, July. Okay. That's when they had the Blackwell chip. That's when China was going to buy the H20, which they never did. All the things never came to fruition. Okay. I started trading this thing almost every day over the last bunch of months. And I could tell you, you know, this thing could go from 180 to 150, 160 without a problem. I'm not saying it will, but without a problem. And it'll still be a $3.8 trillion company, which is really, really high. So all I'm saying is that everything in my mind, listen, everything is location. So what they've done here is they've taken a little air out of the tire. It's like you driving on a highway. So the air is coming out of the tire. Okay, the car is drivable, right? The car's driving fine. You can go 70 miles an hour. Everything is fine. Okay. But all of a sudden, if Nvidia doesn't perform the way that the market is expecting, you're gonna have a blowout. You're gonna have a leg lower. I'm telling you, the option prices don't make sense to me. And I've traded options for 40 years. The outlying, remember yesterday you were kind of saying the calls are higher than the puts. It's so the opposite of that right now. It's insane. I mean,
Right now,
right now, let's go to November 20th. Okay. November 20th. Okay. Holy geez. Okay. November 20th puts. Where do you think the 6,400 puts are? So that's down 250 points. That's down 4%. That's in 2 days. Where do you think those puts are? I'm just saying
right
that's pretty far away, right?
yeah.
$10. $10. That's insanity. I'm just telling you. Listen, we could go there. I'm not saying we can't. Okay, but that is very high. That's sky high. And the
Yeah,
skew,
but that tends to happen when the VIX curve inverts. And the last time it inverted, it didn't invert as much as it is inverted right now. Right now is a little
I
bit.
thought we had a slight inversion between decent and
It got
Jan.
much more. So I'll pull up a chart on that. And what I was, and you called it yesterday, but what I was noticing was the back end of the curve was really getting flat versus the front month. Where usually when you have like a little vol event, all you'll see is like maybe the first 3 months get inverted. You won't typically see the back end get inverted, but like you look back at yesterday, I'll just pull up both of these. They both started to, the back end is now trading lower than the front end, and what I think is actually going to happen is this is going to be a straight line down backwardation fully.
I don't
And
I
one of
don't
the
I
reasons I
don't
think
see that. I don't see that. I don't see that. And I think if we have a correction of over 10%, I think that trade is not going to work for them. Okay. I know that's what they're doing. They've done this trade a bunch of times. But if we have an extended down move, which I'm not suggesting will happen, again, I'm looking at a little bit of risk on today. So maybe it's leading me in the wrong direction, but I'm thinking, down 30, 40 points. to get long a little, not futures, but something out of the money. But I'll give you a better one. Do you know where the 6150s are? 6150s is 10% lower than the market in 2 days. 2 days. That means the market will be flat on the year. 10%. Would you think 10% in 2 days is a crash, a mini crash? Pretty much, right?
Well, the
Two and
question,
two and a
the
half dollars. Two and
yeah,
a
I
half
figured
dollars.
somewhere
It's
like that.
insane. I'm just telling you, it's crazy what's
So,
out.
so the question right now in our chat is also they're actually mad at us that we're not mentioning uh, the credit default swaps that have been making the rounds out there. But credit default swaps are sky high on AI stocks right now. I was trading yesterday, and all of a sudden, I see another headline come out on Amazon, and they're financing their AI expansion with debt, 15 billion. And I saw that headline. I'm like, okay, we've been seeing these headlines of these companies using debt more and more, and now Amazon is coming out. Now it's becoming a trend. So CDS is sky high. I know you have an opinion on that. By the way, Boaz Weinstein, hedge fund managers, was actually selling CDS, which is something that I think you want to do, right? You would
No,
do.
I think in individual stocks taking on that debt, like Oracle, if they're pricing something crazy, Oracle's never going out of business, and never is a big thing. Never going out of business, and neither is Amazon.
But
Okay.
the big macro question I think we need to like keep in mind and try to answer is the market. This is I don't know. To me, it doesn't feel like a regular drawdown. There's some liquidity stuff
Dude,
that
I actually am so happy about this podcast today. Now you're all bared up. It isn't a regular what? Eric, we're
well, I was
down
it's
3%
all
from
about
an all-time high. What do you mean
the,
regular?
a regular, just like a regular. Hey, get the air out of the tires. I think what's happening, you have a liquidity issue that could get fixed quick, right? That might get fixed in December, which would be a risk on thing. But with all this debt that they're now using, like if you're a sell side analyst and you're doing your spreadsheets on and trying to value an Amazon or an Oracle, now you have this new factor in play. Now they're using debt to finance everything, right? So that changes a lot of things. So is this? I think the big question now is this more than just a regular drawdown, or is the market? Is this a revaluation of AI right before us? If it's the latter, then what seems like a good technical spot to buy might get blown out. I mean, we could have, a revaluation of
Wait, wait,
the
is this
70
Eric? Is this Eric? I'm actually gonna buy like 50 futures right now.
Oh,
You're all bared up. I
well,
am
the
gonna tell
information
I
has
am gonna
changed,
tell the
hasn't it? The
podcast.
information has changed.
I don't see it. Okay. What I see is what I said. I see air coming out, which is good. Okay. And we are waiting. I like a spread for tomorrow. Listen to this one. This is what I like. I like selling a put for tomorrow. Okay. And buying a put for Thursday. Okay. For earnings of Nvidia. And then having the ability to roll out of that after 4 p.m. tomorrow before earnings. Okay. I love that trade. Okay. I think we're in wait and see mode. I can't believe how bearish you are. I'm not. I think we're in
I'm
a
I'm trying to answer I'm trying to answer some big macro questions, and
I listen to me. CDS, if you're worried, listen, I'm worried about OpenAI failing. I'm worried about Rigetti failing. I'm worried about millions of these fake fraudulent deals. But when Oracle is financing debt or Amazon, you're not buying that. That's money good. That's the United States government, my friend. Okay. These are $1 trillion companies. Not Rigetti's a $6 billion company. Okay, that thing is going to go out of business without a doubt. Okay. But I'm telling you, with my spider sense of trading, what I'm seeing today doesn't make sense. This is this. I'm not saying we're going up. I'm just saying it's going to be hard to go down a lot with the risky assets rallying. Okay. Risky assets were the first thing to give way. Bitcoin is down 30+%, dude. We're down 3. Okay. What I'm saying is like, you're really worried about CDS here? You're worried about Amazon financing?
I'm not worried about CDA. I'm not actually worried about these companies going out of business at all. So there's
Okay. They're
what
just making, Eric, they're just making them pay more to
I'm,
borrow the money with the narrative that, hey, you're backing risky AI. I'm just saying, listen, do I like
there's
it?
new
Do I think
information in the
Amazon,
market. Would you
hang on a
agree?
minute.
Would
I'm
you
just
agree
saying,
there's
do you think Amazon is going to listen? Meta changed the name of their company, spent trillions going into the metaverse, and pivoted and ended up going from $100 a share to 600 or 700. So I'm not worried about Amazon or Oracle financing debt. Now, what I am worried about is basically a lot. This is what I'm really worried about. And I think you see it at like Jeffries and Company and some of these other companies, okay, that take on debt that they should not take on. They're buying second and third tier companies. I'm fully worried about that. And I do think that could cause a massive problem. But I'm certainly not worried about Amazon borrowing money because let me ask you a question. You wouldn't lend Amazon money? I mean, come on. It's unbelievable. It's I understand the narrative, but they're money good. Okay. They're money good. So I'm not worried about that. Okay. But what I think you're seeing in CDS and all of these other markets, where, like we talked a little about the BDCs, those are all small bank loans to small companies. I'm really concerned about that. I think the economy is slowing. I think you're seeing a little weakness in housing, but I'm certainly, and I understand, you see it every single day with these companies financing their build outs or whatever. I'm not that worried. If you're buying a top 5 to 10 company, okay, they're pretty much money good. Now
that's not the point at all, though.
what's the
I think
point?
they're money good. I said that this may be a possible revaluation. That's all. What that means is there when you have a change in investor sentiment where they don't even question valuations. Now all of a sudden you have questions being asked. Okay, so that's the kind of stuff that causes revaluation.
Okay, so where's the revaluation?
Well,
We're
we
down.
may be seeing it right now. That's why I'm not in a
Eric,
rush.
but this is where everybody watching, not everybody, because I know some people who traded with me in the 90s and the 80s are watching. Okay. This is where the new generation of traders, and I'm going to put you in the new generation because you're so much younger than me. Okay. So you're the new generation of trader. You're jaded by tiny moves. Okay. We used to move 3% a day. I'm telling you, the average move we had in the 1990s was a minimum of 1 to 2% in S&P every day. If this S&P went down 2% right now, this place would flip out. Okay. We're down 38 basis points, and you're talking about, a revaluation and a
Well,
correction and all this other stuff. Okay. I mean, talk to me
I
when we're
think you
down
got to
three and
try.
a
I
half
think it's
percent.
out there. I think it's a possibility. But you've been looking for a short for years, right? And now things may
For
actually be
years.
setting up for that, and you're trying to get long.
Why do you say I'm looking for a short for years? I'm looking to trade every single day. Again, anyone who wants to see what I have on, go to the opportunistic trader ETF.com. You'll see what I have on. You'll know exactly what I think and what I'm doing. Okay. So yes, my mantra, because I grew up trading, is to always be leery of the short side because over years and years and years, the short side comes to bite you a lot harder even than the upside. And like you said, we fought back and forth all year I've missed the move. Basically, we had a long in April and a long in May. So we missed the move in June, July, August, September, October, and November. So we're going on 5 months. And guess what, Eric? We're up. We're up on the year. So what does that tell you? So when the down move comes, we're going to be able to maneuver. But what I'm saying to you is looking at the market, you're talking about revaluation. What is a revaluation to you? That's the question. You're not really saying, is that a 10% downside here, 20% downside,
That's
2%?
usually
What's the
that,
revaluation?
that's usually 10%.
You think we're going to have a revaluation before the end of the year? I'm just asking. You're not answering.
I don't know if it's by the end of the year, but I think there's a possibility that it's out there now. I'll give you an example. CoreWeave had earnings. Okay, they used a lot of depreciation. They backed it out to make their EBITDA look good, but their cash flow wasn't good. Nobody cared. Now all of a sudden, everybody's referencing how all these AI companies are using depreciation to make themselves look good. Okay,
Eric,
that wasn't. But notice how that changes.
Sellers live
Notice
lower.
how sentiment has changed, and now investors are actually paying attention to this.
Dude, this podcast is getting me so bullish that I can't even I don't. What changed? The price changed. We came in a little. Okay. What was the stock that you loved every single day you were talking about it on the air? I forgot what it was called. It was one of the things like CoreWeave. I forgot what you called it. Thomas isn't here, so when he gets back, I'll get the name. Every day you were talking about this stock. That stock I wouldn't give $1 to. I wouldn't give $1 to CoreWeave, okay? But I certainly would back Amazon, Microsoft, Meta. I mean, these companies are here to stay. CoreWeave might not be in existence in 3 years, okay? And the stock you were talking about, which I know you know what it is, you were talking about it every day. I forgot the name. It was in kind of the same thing, but those stocks I don't believe in. But like today, I'm looking at, I'm just trying to look at the market, okay? The SPU is down 28. The NASDAQ is down 31. And I don't, other than some stocks looking a little weaker, I don't see anything that's giving, like yesterday, Bitcoin was collapsing, okay? And the day before and the day before. That gave me thought that, holy cow, these clowns who still have not sold one Bitcoin, which is, unbelievable that there's been no panic. My friend and I, who's on this podcast right now, we're waiting for what we used to call the whoosh. We want the whoosh. I've never seen something come down over 30% and have no whoosh. There's no whoosh where the screen is shaking. I'm sure you've seen that in trading when the S&P goes down and it's shaking and you can't even see where it is. I mean, literally, we didn't have any of that in a 30% down move. And now we're talking about a revaluation in the S&P, which, listen, you may be right, okay? But we're only down 3% from an all-time high. You have an asset, Bitcoin, that's down 30+% from an all-time high. That's a revaluation. Talk to me when stocks are down 10 to 15. Then you might have the revaluation. But like for me today, as a trader looking to trade today.
Well, then the revaluation would have already happened in the past tense.
In what?
If the market goes down 10%, why even, right? It would have already happened. We're talking about it now, trying to estimate what could happen in the future.
I am trying to understand what that is. Like, I don't understand, what's changed the tone, your tone, which has been pretty much bullish, right? To, I'm not calling you bearish.
I know you call me bullish all the time, but I mean,
is it price?
I think it's more like you're just trying to be funny. But would you say that I'm always bullish? I've been recommending shorting Rigetti. Has that not been the case?
I'm not, dude. You don't have to defend yourself on the podcast.
I'm not defending myself, but
we're talking today. Okay, we're talking today. I'm saying in the past generally, and you've been right. I'm not saying you haven't been right. Okay, you've been right. But what I'm saying is, I think you think we're down a lot more than we're down. I mean, what was the all-time high in SPOOs?
I
3%?
think that I think what's happening is a mixture of liquidity,
Mhm.
a liquidity issue, which could get corrected quick, and that would, be a risk-on event. Or we're in the middle of a revaluation in the market, and we don't even know it.
Mhm.
So
Okay,
this
so
is
you've given. Wait a second, just so we're clear,
that makes me not,
you've given up on
rush
the
to buy
upside
here.
here. You've given up on the upside. Okay, so if Nvidia comes out
Not
with
in a rush,
blowout numbers, what
put
do
it
you
that
think is going to happen? What
if
do you
what
think is going to happen if Nvidia on Wednesday night comes out with blowout numbers and and this and that? I'm not suggesting they will. I kind of think it won't go that way, but I'm leery if Nvidia says how good AI is and this and that, and the market takes it as a positive, we're going to leg higher. I hate it.
how many
I
times has
hate it.
Nvidia come out? How many times has Nvidia come out with earnings and then the market does something counterintuitive the next day? Many times.
It's not going to do that on this earnings. This earnings is, as CNBC says, is the most important earnings of all time. I'm not saying it's the most important, but these earnings are very important to where we are in the AI cycle. Okay, and they're going to tell a big hopefully a true story of what it is. But I think, you're saying liquidity, and you think because the Fed has reserves or whatever, that makes
Yeah,
retail buy.
yeah.
Retail only buys when the market's going up. My friend texted me yesterday and he goes, I mean, I've actually gotten 3 texts. What the hell's going on with the market? I'm like, dude, we're 3% from an all-time high. Things don't go up every day. Like, you got to relax, and they're all freaking out. So let me ask you, they can handle a 30% plus down move in Bitcoin. They can handle that. But when Nvidia goes down 15, they freak out. Or when Meta goes down 100, they freak out. Even though they're long Meta at 300 a share and it's trading at 600. And guess what, Eric? They haven't made a sale. They'll never sell it. They will never sell. They will never sell. So the bottom line is they complain and whatever. And maybe we'll see. Listen, I think listen, we're going to
Call on,
probably bounce
good
around
call,
today,
good call on
tomorrow.
gold, man.
What?
Good call on gold, Uncle Larry. That was good.
Whatever. I just don't understand it.
I actually took that trade. I said as soon as you get bullish gold, I'm going in.
All right. Well, don't jinx it. Let's hope it holds up. But
Oh, you need the superstition. Do you like when you get on a hot streak? Do you change your socks?
of course you do. That's the most important thing to trading. I discussed that a couple of days ago on the podcast. So like when I'm doing well, I'm massive in size. I just keep sizing and sizing. And that's the one thing that I've seen in my career managing. I've managed hundreds of traders. I've sat next to guys. I got stories that I should tell on this podcast that would
Yeah, why
make
don't you do that? Actually,
it would make your head spin. But
the best thing I've ever heard you say, the funniest thing, and I can actually envision this. You're like, trading on the floor is the only place where you see degenerates standing and working right next to PhDs, and I
oh,
found that very funny.
without a doubt, I can picture it in my head right now. A guy would put a bullet in the back of your head standing next to a guy that graduated Wharton at 18. Okay.
Doing a live
Literally standing
coke
next
off
to
the
each
guy's
other. I
forehead,
won't I won't mention
trying
names,
to
but
calculate
I
some
have
tequila.
seen that. But I'll tell you a quick funny story. So this just shows you how the market has changed. You ready? So who do you think is running all of these algorithms? It's a bunch of kids from MIT, from Wharton, from University of Chicago, whatever, right? They're running the whole market now, which I give them kudos. They've come up with an angle, with high speed, etc., to make money. But when I was on the floor in the 80s, we had a program. This is a true freaking story. We only hired Ivy League graduates. Okay. We brought a bunch of Ivy League graduates to the floor. These guys couldn't make money if their life depended on it.
Oh
It
yeah,
was the most amazing. And what's amazing about the stock market today is these degenerates, sorry to call them degenerates, but they're scamming the system. Like, listen, I do you know that you know what the biggest market in the world is going to be? Okay. Like options. So it went, most people were equity traders. Then everyone's doing zero DTEs. And now they've come up with something. You can do this on interactive brokers on Robinhood. They have these bets. You could bet on the market, literally bet if it's going to be up or down, how much it's going to be up or down, what stocks are going to be up or down. Like, so they call it props in sports gambling, but they've given props out on the market. These degenerates are not even going to do options anymore because they're going to have odds on, like right now, the S&P is down 30. They'll give you 1.5 to 1 that the market's going to close up on the day. People are betting that, a straight bet. So you don't even have to worry about the market going up or down. That, you want to talk about the problem? That's the problem in the market. And as you know, because we picked up on PolyMarket years ago, PolyMarket is now been bought by a US company and is coming to the United States. A friend of mine is the CEO, okay, of the American company. It's insane what he told me, what he sees. They're betting everything, millions and millions,
You know
just
what's funny?
gambling it up. So
You know
really,
what's funny? You mentioned Sam Altman is a fraud. They're actually betting on Polymarket when he's going to jail. And
listen, I want to take that bet. I've never seen a
so
human.
the
Dude,
June
that
by
guy
June
is
30th,
slippery
it's a five
beyond
percent
belief.
probability.
Well, let me
By
ask you
June,
this. The company did $13 billion in revenue, which isn't a lot. I mean, it's okay. They lost a ton of money, but yet he did deals all in 2 weeks. You haven't heard from him in month
I
and a
don't.
half. Okay. He did $1.5 trillion in deals with all competitors in the spaces. They did a deal with AMD, a deal with Nvidia, a deal with this. There's no way this guy, that's the big problem in the market. There's no way Nvidia could take this guy on face value. So we're gonna see how all of that plays out. But looking right now, you know, it's the market has become a gambling casino, which is fine. It's good for what we do with the
That's
opportunistic
society.
trader.
Society has become a gambling. Has brought on that gambling component.
But you know what's funny? Let me just tell you this. This is what's funny, okay? And I remember this as a kid, and I don't know if any of you guys, he doesn't announce anymore, but he was around for generations, Brent Musburger. So Brent Musburger was the top like broadcaster, and he used to gamble like crazy. And like he would like say, "Oh, and if he kicks this field goal, whoever's going to cover." They would never talk about gambling. Now, if you watch a sporting event, there's 50 commercials for different gambling apps. It's insane. And the same thing went for trading. Like, listen, we don't feel like we're gambling. We think we have, edge with defined risk, and we have a lot of knuckleheads trading options so we can make money. Okay. But really, like you said, I'm not going to call it society, but I'll say generationally, the generation now is gambling. They want the return today. They want to hit lotto. It's not, this market is not an investment. They say they're investing, but they're not investing. They're looking for the next angle. So this is the market we're in. And, that,
And a lot of people, I think, the academics and the quote unquote intellectuals are looking at this gambling thing in society as a function of the disparity between the haves and the have-nots. I think there's some truth in that because a lot of people are like hand to mouth in this country, maybe all over the world, and they need to like hit a home run to make things work. And they're like, listen, what do I have to lose? They don't have assets. They don't have homes. A lot of people.
so they're
So
betting it all on a stock for the day. I
they're like,
mean,
look, I'm going to put $100 in. What do I have to lose?
I
That
don't
kind of.
know. Eric, listen, I'll tell you, I've been doing this a long time and I've been trading options since 1984. Okay, that's a long time. That's over 40 years. Okay. I have never seen what is going on in the market right now ever on. I can do in options any size I want, sizes that are unbelievable. Back when I was trading in my hedge fund, the only people that provided that size were the banks. The banks. I had to call a bank to get markets. Now I can sell thousands of lots or buy thousands of lots in one click on my machine. And I don't know who the hell the other side is. It's incredible because really banks are not allowed to trade for risk. So this is all like Jane Street, Hudson River, Virtu. I mean, the sizes are, I'm just telling you, they're incredible. They're incredible. So,
Cloudflare is out. They have a outage or something. Lots of websites are down.
well, oh, Sammy Altman's down. Sam Altman's site is down. I love it. What is Sammy doing? Dude, I want to put that bet on him. He's not going to be here in 2 years. This guy is. Do you ever see him on interviews? It's like, it's crazy. It's
No,
like,
I mean, I see him on interviews. I can't tell if he's a fraud or he's just like a caricature from HBO Silicon Valley. Like, I'm not sure which one it is.
I would say he's closer to a fraud than anything. Listen, that's like me stating my P&L before the year starts. Yeah, I'm going to make 30%. Okay. I think that maybe, but I'm not going to know that until December, or maybe lucky enough to know it in November. This guy is forward loading everything and praying to God that it hits up. That's all I'm saying. So I think that, when you talk about CDS and Oracle and, Microsoft, let me ask you a question. If Microsoft funds whatever they're doing, you have a problem buying that debt? I'm being dead honest. You have a
I
problem
don't.
buying that
I
debt?
don't have a problem, but what is the stock worth? They're gonna just think about it from the perspective of the sell side. The AI trade has been moving on and on. Things have been going up and up, and debt has not been in the equation. Now all of a sudden you have debt in the equation. That changes value. Just that alone starts to change things around.
Oh, listen, I'm not disagreeing at all with that. I'm just talking about buying
You
that debt.
you add now the psychological element where investors who have been riding the gravy train and they have been psychologically looking for reasons to stay long, all of a sudden they're starting to rethink. As soon as you start the rethinking process, you get markets again. You don't get straight up. So that on the other side, the bullish side here is, part of this drawdown is liquidity
Where's my
driven,
order? Take that
which the
order.
Fed is going to
I
inject
don't even
right
know
back
what
in
I'm gonna do.
December. So there's a lot of forces at play, and it's just making me not in a rush to do anything. Plus, yesterday you had the S&P 500 close below that 50-day moving average for the first time since April, right? And the 100-day moving average is only like 2% down. You
I
don't
would
think
I would say this to the people that are watching. We may go higher or lower from here. I'm telling you, since we got on the air, gold has rallied almost $40, which is a pretty decent move. Okay.
great
I
move?
feel like that's risk on. I'm just telling you my thoughts. I'm not saying it would not shock me in the least to see the S&P positive today at all. That's not saying a lot. It would not shock me because the assets that were panicking everybody are not going down right now. They're flat, like keep an eye on Bitcoin today. If that thing catches a bid, the market may catch a bid. But I really think we're
I
again,
hope
you may go lower and they may relocate the
the
market.
spread's open, dude. Like I hope the market comes back today
Dude,
specifically.
you're gambling, bro. Let's go. You're hoping. I'm hoping the Knicks
I'm hoping
beat
the
the Heat
market comes
tonight.
back, but at what happens tomorrow, towards the end of the week into that December 1st,
Dude,
into
I keep telling you what's happening. They're waiting on Nvidia. Now, they may wait on Nvidia 50, 100 handles from here, but they're waiting on Nvidia. That's the story of AI.
Maybe
Okay.
they're not waiting on Nvidia.
Okay. All right. Then waiting on Nvidia for what? You don't even know what they're waiting. What? They are going to sell? I mean, okay, they're going to sell, and then if Nvidia goes the way that Dan Ives and Dan Niles and all the names from the '90s think the stock is going to go, then people are going to have to rebuy. So I think market's going to flop around. Market's starting out very weak today, which is interesting and good. But I'm just telling you, um, I'm looking at the tape and I see opportunity to the upside, meaning like for me, listen, I'm bearish in general. I'm a little cautious, but what I would say to you is a good strategy, and it's worked the last 3 or 4 days in 22, 23 volatility. Selling upside calls really works because as the market stabilizes, these calls basically lose the volatility. So it's almost like a double-edged sword. So that's what I'm looking at today. Looking at the other markets, bonds are ticking back up below, you know, for 409. Like that's another interesting thing. Bonds are up today. Okay. Dollar's flat. Gold is up today. Oil's kind of flat. Like
By
what's
the way,
the
bonds. I want to talk to you about bonds. So, come December 1st, the Fed is going to start re-injecting liquidity. So, I think to some extent, rates have been up for two reasons. One, the last Fed meeting, Powell said the December meeting is up for grabs. So we don't know if we're getting a rate cut or not. So rates went up. But also, I think it's partially this liquidity issue. If rates continue going up, I think potentially December, early December, late November might be a great time to start buying bonds.
okay?
Kind of eyeing that trade.
All right. Well, why not start today? Doesn't you missed about 4 bips. I mean, there's no movement in any of this stuff. It's kind of wild, actually. I'm looking at it. It's kind of wild.
Are you
But
going long bond? Are you going long the bond?
no, I was going to go short the bonds, thinking that when the Fed doesn't cut, the yields are going to back up. But I don't see a trade there. Still long. Dollar euro hasn't moved. Dude, the dollar euro hasn't moved in days. It's like 116 stuck. Okay, the yen is 155 stuck, and somehow the S&P flings around, like crazy every day, and all these other markets are kind of stuck. But I would keep an eye on Nvidia today. I would keep an eye on Bitcoin. Markets opening in the hole fairly
You,
decently.
you sound like you want a bullish indicator. I'll give you one. The Nasdaq S&P spread hasn't really come off over the last couple of days. Um, you know, it's kind of holding in there with a divergence in RSI. So
All
maybe
right. Well, listen, we got to wrap. We're 7 minutes from the opening. Again, keep an eye on those indicators. Markets, what's interesting? Markets opening down 35. This is like the worst opening down that we've had in a long time. I mean, even yesterday we didn't open down, you know. So, keep an eye on that. Keep an eye on Nvidia. The Nvidia straddle is very expensive for earnings. They're looking for about a 15% move in Nvidia. That's pretty good. Um, Tomorrow we'll touch more on Nvidia and anything else. But right now, keep an eye on those risk on indicators. Keep an eye, this is an
55
interesting.
point 55 point straddle here at the open.
Love that. Love that. Yesterday, I sold a call spread. I sold the call spread up $85 for money yesterday. I mean, there's money to be made here. So I would, highly encourage, buying, selling call spreads. And then as the market moves, then you can rotate into put spreads if you have to. If you don't have to, then don't do it. But here we sit. I wish everyone luck. We'll be back to everyone tomorrow. And remember, just keep an eye on those risk on indicators, risk off indicators. And, we'll see what happens today. And we'll be back tomorrow. Enjoy. Peace.